Crypto has been quite nice today. Most things are up, but there are two tokens that are up more than others. That's Trump and that is OM, the Mantra token. Now, we've been covering Mantra several times on this channel and we're going to do it yet again. We're going to look at the data most people are not considering. We're going to dive deep into the blockchain. Now, today Mantra is at $7.72. It is up 38% today, 95% this month, and it almost 30x this year. Now, here is the all-time price chart, but there is something interesting about this chart. Compare the peak in March of 2021 to the current price. We have seen roughly a 10x. And now compare this with the market cap development. That did much more than a 10x. Mantra is one of the very few altcoins that were able to outgrow token demand despite the supply increasing quite quickly. Have a look at this. This is the tokenomics of Mantra, or how many OM tokens are circulating over time. And this did go up quite rapidly over the last 4 years. We went from 130 million OM to currently 750. So if the demand for the token does not grow as quickly as the supply, the price should be going down. But obviously, this is not what happened for Mantra. Mantra was able to achieve the thing that very few altcoins are able to do. And here's the story, the narrative that's driving the rally. It's real-world assets. It's the idea that real-world financial instruments will get tokenized on the blockchain and get traded over there on the Mantra blockchain. We already have real-world assets on the blockchain, right? The largest category is the stablecoins. So there is a stablecoin issuer like Tether that takes into custody some fiat currency and then issues stablecoins against this. There's also gold that got tokenized, also by various issuers, for example, Tether as well. The idea is that with the Trump administration and with more pro-crypto regulation, that we might see also other assets that get tokenized. Maybe there will be tokens that are backed by ETFs, by exchange traded funds, right? Why is there no token yet to simply just mirror the S&P 500? Yes, I understand how there could be a problem with insider trading for individual stock, but I don't see that issue for indices, right? So maybe BlackRock at some point will issue tokens for the S&P 500, for the Nasdaq 100, etc., so that all of that stablecoin money can get deployed into traditional finance as well. So Mantra is riding that story. Now, unfortunately, so far, it's still a story. It's not yet adoption. So on the Mantra chain, we only have 4.4 million of total value locked, and all of that is on Mantra Swap. And Mantra Swap is simply just another decentralized exchange. Most of that value is in stablecoins, USDY versus USDC. That's 2.5 million. There are also liquidity pools for Cosmos Atom versus USDC and for the Mantra token, etc. This is just very standard decentralized exchange stuff. There's nothing really going on just yet. There is also a staking program for OM. So if you lock up your OM tokens, you can get an APR of 5.6% roughly. Now, this is not the first video on Mantra on this channel. I've published 4 before this one here. And some of those videos got quite a bit of a viewership. So this was the first video published roughly 1 year ago. It got double the views of a regular video. So the average video is here in gray. And that particular video is marked in blue. Here's the second video. It underperformed slightly. Here's the third video. It outperformed again by roughly 2x. And here is the latest video. It tends to now get some traction and it is now a slight underperformer so far. Now, here's the problem with analyzing Mantra, right? Mantra is its own blockchain, but Mantra, or the OM token, is also ported over to other blockchains. We can have a look at those kinds of tokens. So there's a representation on the Ethereum chain with 37,000 holders. There's another representation on the Binance Smart Chain with 10,000 holders. And there's a third version with 24,000 holders on Base. Now, this looks like the liquidity is relatively equally split, but we're going to look at this in a bit more detail. What we've got over here are the statistics on the Ethereum chain. On the left side, we've got the number of retail investors. On the right side, we've got the number of whales. And to differentiate across those different segments, we look at minimum holding thresholds. So on the left side, we've got a minimum holding of 100 tokens to be counted in that chart. So at the current price, that's a bit under $1,000 worth of the token. To be counted in the middle, that's 1,000 tokens. To be counted on the right, it's 10,000 tokens. Now you can clearly see how the number of retail investors tends to grow over time, and especially since Q2 of 2024, so of last year, we tend to see a lot of growth again by retail. We don't see as much growth by medium-sized retail. We actually see since October of last year how the number of medium-sized retail investors tends to go down, and especially the number of whales is going down. Isn't that interesting? The price of Mantra continued to go up despite that reduction in the number of whales. Here are the same statistics for the Binance Smart Chain, and just have a look at the difference, right? Even though it seems like the number of holders overall isn't that different, the number of whales is. So the real deep money is rather on Ethereum than on the Binance Smart Chain. There's 10 times more whales on Ethereum compared to the Binance Smart Chain. And over here, we've got the Base chain. Here, the whale money is pretty much non-existent. So Base is really just used by small retail, and they tend to buy sometimes. But again, it seems like there is a drop in the last few months, and the Binance Smart Chain holders are reacting a bit more quickly. The Ethereum holders are a bit slower, but the whales tend to be faster than retail. I find this quite fascinating, right? The price of Mantra is going up while the number of whales is not. And usually the small retail investors don't have enough purchasing power in order to push a rally through. So something is going on. I can't really put my finger on it, but usually we don't see such a mismatch. So something is happening. I don't know what.
Here's the thing, the market isn't expanding as quickly anymore as it used to, right? With the Trump push, now the question is what can come that's even larger than that pushes prices even higher. And because of that, because it's more and more player versus player, even though the market in aggregate might be somewhat balanced, it's still just a few assets that outperform everything. Have a look at this picture. The tokens that are between 101 and 200 in terms of market cap, they in the last month went pretty much plus minus zero, right? They gained slightly. But when we look at this picture here, that's just because there are a few massive outliers. And the question really is, when we look at 100 tokens, how likely is it that we are going to pick Toshi or the Swift coin or AIC? Especially when we hold a diversified portfolio and we have, say, 5 or 10 altcoins, the likelihood is pretty high that that altcoin portfolio is going to underperform. Because if you held AI16Z and you made a minus 76% loss, or you held Turbo and you lost 40%, or you held Memecoin or Mu and you're down more than 30%, it's very hard to still have positive performance. And I'm a fan of trying to get the odds in our favor, right? It's possible to pick the winners if you're very early and if you adopt something like Trump in the earliest hours and if you're one of the top traders, that is possible. But if you don't have time to watch the crypto markets 24/7, or if you're not based in Asia, then it's very, very hard to get those winners all the time. And so why not go the easy route? Why not simply bet on falling prices? If most altcoins do worse than Bitcoin most of the time, and if there's just a few assets that outperform that massively, then we can just pick a random asset over here and we are very likely going to make money in the next month. We just have to make sure that we don't fall for those few tokens that are discussed everywhere. When we bet on falling prices of Chili's or of Safe or of DYDX, then that's a comparatively safe bet. It's definitely still risky because this is the crypto market and the crypto market does get manipulated, but it's less risky than trying to find the needle in the haystack. And there are some tokens that underperform more consistently than others. For example, this one over here, Balancer. I started shorting Balancer in the middle of 2022. I went on and off about that position. Sometimes I was short, sometimes I was out of the market taking profit. But since that point in time, Balancer underperformed Ethereum by more than 80%. So it's not just that most altcoins do worse than Bitcoin. It's also that some of those altcoins underperform most of the time. And so I've made several videos on this topic. It's a comparatively advanced topic because it's also easy to get burnt with shorts. That's why most retail investors don't get involved in this. But there are premium tutorials, how to win in bear markets by shorting altcoins. It's 42 minutes in length. Then there's another video, gaining from relative valuations. Then there's another one, shorting optimism relative to Bitcoin. This has been published quite a while ago. This, by the way, is now optimism relative to Bitcoin. So this was a good position. And the reason why most altcoins do worse than Bitcoin is tokenomics, as in more and more tokens get issued over time. And if the demand cannot keep up with the token issuance, then the price has to underperform. outperform the rest. Now, this is not a good strategy during a massive bull run, but it is a good strategy during a bear market, of course, but also during sideways movement. Because again, even during a sideways movement, money flows just into a very few basket of altcoins. Most alts do worse. And so this is all part of the premium membership of this channel. Premium is not just about shorting, it's also about on-chain analytics. It's also about portfolio management and risk mitigation. There's more than 100 tutorial videos in total in premium. Now, this is not a topic to make a 10x next week, but it is a topic to outperform steadily and slowly. And if you can only outperform, say, by 30 percentage points per year, and Bitcoin itself already grows by 30% per year, which I believe is somewhat of a conservative bet. Then if we do this over 4 years, and again, we don't have to trade very actively, we can 8x our capital. Now, if you have just a few $100s of invest, then an 8x within 4 years doesn't really sound that great. And then by all means, feel free to gamble with that money, right? Because you can also recoup the money very quickly just by working more, just by saving more. But if you've got already several years of your income saved up, or if you've got $10,000, $50,000, if you have more money, then an 8x does matter, right? 10K becomes 80K in a relatively okay-ish time period. And so I actually find it easier to make money in bear markets and during times like this. Again, because we don't have to pick the winners. We can simply have a diversified portfolio of short positions. Again, because most altcoins underperform Bitcoin most of the time. If you own a lot of altcoins and you hold them over 10 years, you're probably not going to do that well. Because have a look at the top tokens 10 years ago. How many of them do you really recognize? Paycoin, BitShares, MadeSafeCoin, NXT. Yes, Stellar is still around, Dogecoin is still around, but where is Peercoin, Counterparty? Dash also underperformed Bitcoin quite a lot, so did Namecoin. So really, the crypto markets are not venture capital markets, right? The crypto markets are very much player versus player, and it's better to simply bet on the vast majority doing worse most of the time. Not in a bull market, but most of the time. And I believe currently this does apply. Currently we are in most of the times. The crypto valuations are comparatively high. A lot of people made profit and took profit at 100K. And so if your portfolio is large enough, it's not just a few $100s, but it's maybe in the $10,000 and above, then feel free to check out the premium membership. There's also a 1-week money back guarantee. So in case you don't like premium, simply message me within the first week and I'll refund you 100%. There's really zero risk for you.
Now, does it still make sense to buy a Mantra at the current prices after we've already seen the rally? Or are we going to see just a regular pump and dump, and do we get disappointed yet one more time? Let's have a look at the activity on chain. What we've got over here is the number of new users versus returning users over time for the last month. And especially in the last 2 days, we have seen a lot of new wallets that suddenly started interacting with the token again. In the prior days, we saw around 200 new wallets per day, but yesterday we saw 2,500 wallets. The ratio of new users versus returning users is also improving. So this is good. When we zoom out a little bit and we just have a look at the number of buyers and sellers over time, we can see how activity comes in waves and how we are currently rather active. What's important is that this activity stays elevated, that we're not going down, because there is some correlation between activity and prices. If there will be less and less buyers and sellers going forward, the price could deflate. It's important to keep monitoring this statistic. Besides all the activity on chain, it's also important to monitor what happens on the centralized exchanges. Because most trading volume does not happen on the Binance Smart Chain or on Ethereum. Most trading volume happens on DGFinex, on Gate.io and on OKX. There are also perpetual futures on the price, and that is dominated by Binance. So Binance might have his hand in the price as well. Within the real world asset narrative, Mantra is the second largest play. Chainlink is also included in this list, but Chainlink is mainly used as a data oracle, so as a technical solution to move data from off-chain to on-chain. Now, with the adoption of real-world assets, Chainlink will be a beneficiary as well. Mantra is the biggest play just on RWA. The market cap with 7.5 billion is already quite large. We are unlikely going to see a 10x from here, and so this is an incremental bet. I think the best way to ride this wave is to use a trailing stop loss. So as the price rises, we can adjust the stop loss, and then once the rally stops, then we very quickly take profit and we get stopped out. If you got some value out of this video, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers.